Welcome to Momentum Monday. Today is January 2nd, 2022. Happy New Year, Howard. Any new resolutions for the new
I
year?
can still spend yeah, I said eat less, drink more water, and sleep better. And I'm already struggling.
Are you using any technology for your sleep, or how do you go with it?
Yeah, I'm having my daughter smack me in the head if she thinks I should have a sip of water. No, there's no, listen, eating better is just a mental, a battle of addiction, sugar. And then sleep is just a process, and then should be easy.
Yeah.
I'm doing my show. Max is
Are those
making
your
my,
NFTs in the background?
no, that's Max. Doesn't have a shirt on for all the ladies watching.
For all the two ladies watching.
I don't know, he's looking a little heavy, actually. Yeah. He was once a skinny kid. I mean, look, they're all running around here.
Do you know where I remember? Like 7 or 8 years ago at your office in Coronado, maybe 10 years ago. So I entered your office, and then you had like a blank white painting with just the number 630 on it. And I asked you, this is your credit score. You said, no, that's Max's number. And then you explained how there was an artist in Phoenix who made 1,000 of those with the number 1 from 1,000.
I remember that was kind of like an original NFT.
Exactly.
But
so that was the original NFT. Yeah.
I can't believe I don't know where that is. Fuck. It was 1,000 paintings. Hang on. I'm looking it up right now just because I'm sure it's worth $1 million, and I don't know where it is.
All right.
Anyways, that was yes. That is the story of 2020. The meme stocks everything was a story. S&P up huge, Warren Buffett up huge, NFTs worked, crypto worked. The only thing that didn't work was stock pickers. Kathy was down, ARK was down.
Well, but after a big 2020, it's
I understand, but I had
surprise.
All the people that had huge 19s and 20s struggled last year. The question is, is stock picking come back? Right? I'll go through some of this stuff with you, but you go ahead. Happy New Year and take the lead here.
Yeah. So currently all the main indices are in a range bound mode. The S&P basically spent last week, it gapped up, and then it spent the rest of the week kind of tight range, which is normal for end of the year. The same for the Qs. Small caps are kind of starting to show a little bit more strength lately, which is normal. They usually outperform in January, the so-called January effect. Nothing really is looking that hot as of right now, but maybe tomorrow things are going to change. What I know that for the beginning of every year is that typically the worst performing groups and stocks from the previous year tend to bounce and outperform in the first 2-3 weeks. And we kind of saw a glimpse of that last week with Chinese stocks. No one would touch them right now, obviously, but on Thursday last week, many of them were up 10%. So I'm expecting to see more of these 1 to 5 day wonders earlier in the year of stocks.
Correct. These bear market rallies will be vicious until we get a real
cannabis bottom. And China and all those other sectors, maybe gold, that were really not really performed that well last year. Maybe we'll see them shine earlier. We see a mini reversion trade while some of the mega caps, maybe they'll take a break.
That would be typical right now, and a lot of people were preempting that last week. Even I was putting together a list of dogs that could bounce, but it's just not my style. I'm just looking for what's leading. So what's leading coming into 2022?
What's leading is electric vehicles, and Tesla is still doing well. Setting up above its 20-day. The Chinese ones are also reporting strong numbers. Like they more than doubled production, XPeng and Lee, NIO. So technically, they're looking really constructively. Like this one, XPeng, Lee also setting up. NIO, the big one, it doesn't look as good. But yeah, electric vehicles, also semiconductors, might need some time here to consolidate, after a huge 2020. Consumer staples, definitely, which is a defensive sector, near all-time highs, which is typically not bullish when you see those types of stocks make new highs. So
how are you positioned?
So I'm invested very barely, and I own some Facebook as a metaverse play. As Oculus was one of the best.
It really was. My son was telling me that Oculus Golf is phenomenal. Again, I don't know how big a market that is for a product, but like he's a golfer, and for him to be impressed by the product is said all his friends were playing
it's
it.
Rare. Yeah, I mean, it's an entirely new platform. If you play with it a little bit, like you can use it basically, you can watch any 3D or any movie with whatever size screen you want.
Still feels very like a very alone thing. Even if you're playing with a group, you got to strap it on, and
definitely. I mean, I'm sure they'll change the
hardware.
Sold. They'll change.
I believe gaming's huge. I don't think it's enough to move the Facebook.
Yeah, Facebook is a big company. I mean, almost.
Yeah, I don't know if it's enough to move their needle.
But we'll see. I mean, that's why on Monday, they were super strong. They gave it all up. So see if they can hold the 50 and the 200 day. Some of the mega caps are not, like Amazon, as you see, breaking down. Let's take a look on Shopify real quick. Also not looking super hot.
But also digesting huge gains. So considering like again, when we say super hot, let's go look at some of the leaders that, like from Zoom to Zillow to Peloton. So there's a difference between digesting gains and giving them all back, right? And so true leadership can have sideways years. These are not sideways years. They can't get a bounce. And you can just feel the clamp. Zoom is still in my 8 to 80 portfolio, but just about to be done. The teams, at some level, the inferior product with a better network can win, as Microsoft has proven with Slack, forcing, basically Salesforce to buy Slack. And that's why I think like none of these other story stocks work for me, like Teladoc and all these things, because of Zoom and Google and Microsoft. But I think Microsoft and Google have really shown that they could stick it to Zoom. I think that's the most interesting story, even though a lot of people predicted the demise of Zoom. I think I felt like the superior product and all the different ancillary businesses you could run off video were a bit of a moat, and you can just see that, even though earnings are really, it's only trading at 40, 50 times earnings now, or it was trading at thousands of times earnings. So we'll see. This is a make or break year for Zoom.
But this is also the type of stock that no one is really touching. Definitely the momentum guys are not long, they're short.
Right, it's not value. It's
the trend followers are short. Stock. It's not the value stock. So it's in a no man's land where no one's going to touch it. They're like mostly sellers. This is why it's been declining below. It's declining 50, 200-day moving average. Yep. And it's the oldest story in the world when you see like a big momentum name that would go 1,000% in 1 to 3 years.
That's when you say that Shopify is not looking good, and Amazon, they have sideways years, right? They're so...
Yeah, of course.
They're digesting rather than giving back.
Considering that move here, from 120 to what is it, like 1,800.
And so I think one thing I was going to do, if I can share the screen, I was going to walk through a few interesting.
You can share screen.
Yeah, let me just try and share it. Desktop.
Okay, let me. I need
to
stop sharing, and then we're seeing your screen.
All right. So I thought this was interesting from Charlie. If you can see this.
Yeah.
S&P entered 2021 with a P ratio of 30.7, which everybody would have said or at least all the smarty pants would have said, this is the top, PE of 30, and guess what happens? Earnings grew 60. Mark what's forward looking. Guess what happened? Earnings grew 65%, and PE, even though the market was up 27%, the PE dropped. It dropped by
about 20%, yeah.
25%. Yeah. So that's why the markets are forward-looking and confuse you. And so while everybody thinks now PEs have come down and they're not so overvalued, this is going to be the story of this year. Not making a market prediction, but while everybody now starts saying, well, the PE's coming under control, I think it's the earnings are going to have a tough time this year because prices don't seem to be relenting. And you have supply coming at us from every angle, from crypto to SPACs to IPOs to direct listings.
So are you bearish?
No. I'm just, again, like I'm not bearish. I don't have an opinion. I'm just still very cautious. I'm always an optimist, but I'm cautious because I don't know how earnings top 2021. Now, there'll be great companies. I just don't know how earnings can top 65% growth. So the question is, do we mark time? Or do we have a big correction? I don't know. Or do we just, it's very, very inconceivable to have a fourth 20+% year in a row in the S&P. But the government's printing money. The next thing I thought that was interesting from Charlie was every country, median country ETF was up 10%. US was up 30%. The median country ETF was up 10%. Turkey was down 27%. China obviously down 21%. So those are if you were looking for bounces, China, Turkey, Brazil, good old Pakistan, they may be interesting for bottom fishing trades. And here, best performing, worst performing stocks. I thought that was so interesting, Ivan, is that very few people, this is why the S&P did, beat so many people this year that were stock picking, Devon Energy, Marathon Oil, small banks, regional banks, Ford Motor.
Yeah, value stock definitely here to come back, yeah.
You know what I mean? Like this was Simon Property Group during the pandemic. Obviously NVIDIA, a lot of people had. And then the worst performing stocks, it was interesting to see PayPal, Twitter, Las Vegas Sands, Activision, that was surprising. Barstool Dave down 40%. So it was just an interesting year. And then the next, I thought, thing from Charlie that was interesting was all 11, there's 11 sectors in S&P, all finished with double-digit gains in 2021. So again, it was, dirt picking, unbelievable. And then even with bonds at zero, the 60-40 portfolios, best 3 years since 97, 99. So you could just have been 40% basically in cash and just had a great year. So the government is really helping out here. And then the comparables, the earnings coming out of the pandemic year of 2020 were so low that, so again, that's why I think this year will be one of the more interesting ones. Okay, and then the last one, again, this is what everybody's talking about, total crypto market value, 2013, 10 billion, 2021, 2.26 trillion. And within that, there was only one, 80% pullback, a couple 50% pullbacks. But you go from 10 billion to 2.26 trillion. So for people that say crypto is a bubble, it's less than the size of Apple right now.
Exactly, yeah.
And with the amount, this is where the context I want to leave it. The amount of smart people leaving good jobs and again, I frame that with the fact that if you leave Apple or Facebook or Google and you have a great job, you can go back to Apple, Facebook, and Google. So it's not the same risk as someone leaving or starting or leaving their restaurant job or raising money from their family to start a business. God bless. But we are talking about an industry that's still less than the market cap of Apple. So it's not a bubble in the scheme of how much the government's printing money. And in the storytellers are going to make money off a move like this, but storytellers have made money through history at any time in any market. So you can't begrudge storytellers. They've always done well. This is a new frontier, much like any other gold rush. But when I see the whole, you got 8 years of the smartest people moving into this industry, and it's still, the whole industry is valued at less than Apple. Something's broken, and maybe it's Apple's overvalued and crypto's overvalued, but in a world of tech and decentralization, there's something here.
Look, there's a lot of money in the system. Like, I mean, Apple's almost 3 trillion. And if you compare that to the dot-com boom peak in March 2000, the value of all NASDAQ listed stocks was like a little bit over 5 trillion. And Apple is like not too far from there. So
wow,
I think that's the peak of the dot-com bubble.
Yeah, and then so crypto's one story. Can the S&P do 4 years in a row after the comparables is my second thought. The third one is we're not quite even at 100%. There's been times where you're just the market just prices a 90% probability of a rate hike. Right now, there's still that surprise. People still believe there will be no hikes. So again, there's still room for surprise with rates going up in this market. So again, those are like the most important things to think of. I don't think you can do much to protect your portfolio. I think the most important thing is understanding your risk profile, because if the government's printing money and there's so much, tech alpha out there, you don't have to be 100% invested. You can be 50% invested and have a nice, last year would have been a nice 13, 14% S&P gain, which is 50% of your money invested. So understand that, you're not going to have 27% years forever. It just doesn't happen. And so people need to stop thinking about how much, and understand their risk profile and start thinking through, what can they be satisfied with as returns. That's kind of how I'm thinking where we're at.
Everything is about perception. Like right now we're talking about, half or 1% is as a high interest rate, and 15 years ago, 3% was considered super low. So everything is about perception. So there might be a little shock this year if they raise the rates to 1%, but over time people will get used to them.
Yeah, I mean, the other shock is continued supply chain problems. People want their iPhones, people want their computers, people have money to spend on cars. So it's, can they get the stuff that they want? And I think that's another thing that, people have very little patience for that stuff. And like I was hearing stories about, ski resorts, they can't get people to work at $15 an hour, and people spend their year saving up to go on these ski trips. Forgetting the wealthy for a minute, the people that finally had a chance to go away in their snow, and they can't open the ski lifts because people aren't showing up to work. So there's still all those coming out of COVID issues. And then you got the election year too. So, I think you got to have a good plan. I mean, in a world where you can argue about what's overvalued or undervalued, but Apple is leading the market, it's not crazy. And in a world where everybody thinks crypto is the riskiest, craziest thing, it's still, for all its growth and for all its, supposed stories and lack of products, it's still, less than the size of Apple. Leads me to believe, there's a lot of money to be made by people who are positioned properly. That's it. Have a great week. Happy New Year.
Yeah, you too, Howard. See you next week.
See you guys.